Yo, what's going on? It's your boy Chak Investing back here with another video. Now, this is going to be very interesting. You're definitely going to want to stay until the end of this video to see all 6 type of trading mistakes that I made in 2024, and I see a lot of my students make in 2024 that we should absolutely not be bringing into 2025. If you want to have a profitable trading year, you have to focus and you have to dial in on these particular 6 trading mistakes that you're most likely making every time you're taking a loss, right? And why is it important to go over these mistakes? When you're trading, you'll notice that you'll be able to take good trades, right? Especially if you've gone through a lot of ICT's content, right? You've watched a couple of my videos. You have good solid setups that work every once in a while. But then let's say for example you have a couple more losses than you would like in terms of your wins. A lot of times in trading, your wins are very obvious why they're a win, but a lot of times your losses, you're either confused or you can't just stop yourself from taking those, which is why it's very important when you're trading is to minimize your losses, right? Study why you're losing as opposed to gearing into why you're winning. When you win, it's very obvious, right? Like everything was in your direction, you had your right bias, you had an obvious setup, but curbing your losses is really what's going to help you amplify the amount of return that you actually are able to make and keep at the end of the month. Okay, so without further ado, if you like what you're hearing so far, press that like button. That's what it's for. If you like the video, and it also helps me grow in this channel and this video get to more people. Leave a comment below. You can just even say, hey, what's up? Or you can say awesome. Or you could just ask me any questions that you have along the way as well, because it helps my channel grow. Really appreciate you. I'm doing this for free, so anything that you can do here will help. I think also I have a Discord below. Make sure that you go join that if you are interested in getting a little bit more commentary and bias on a daily basis. If you have if you want some extra support on where you think price is likely to go today, I gladly am putting that in my channel every single day. But anyway, without further ado, let's get right into it. Oh, also don't forget to subscribe, press that notification bell. Okay, so top 6 trading mistakes, right, that you're making. Let's start with number one. Number one, very important, right? Trading in suboptimal conditions, right? So a lot of times, you'll have your setup, your bias was right, and you're still wondering, why did I lose? There's another thing that you're forgetting: time of day, right? And with time, there are certain times, right, that are not optimal for trading based on certain things that may present itself, right? And when I mean time of day, I don't just mean macros, or I mean this hour, particularly in this hour. What I really mean by this particular time of day scenario is there are certain events that will occur that will make a certain period of time not optimal for trading. And so let's go over a couple of those things, right? One is and this is something that we see every single day. A session after a very large expansion, right? So let's say, for example, we moved a lot in AM, and when you're back testing, this will be very helpful for you. Go on the 4-hour chart, right? Go on the 4-hour, go on the 1 hour. Segment out the session. So segment out London session pre-market, which is set. London's 1 to 5. Pre-market is 7 to 9, right? Or 7 to 9:30. Then go from 9:30 to about 12, go from 12 to 1, and go from 1 to 4. And you can even go from 1 to 3 and then 3 to 4, right? So check out these different time zones where price is being segmented, and tends to have different moves that are characteristic for each of those time frames. And notice that if one of those hours or blocks of hours had a very large expansion, the next hour or the next couple of hours will typically be a consolidation, right? And that makes sense because ICT teaches, right? You have a manipulation, so you have accumulation, manipulation, and then distribution, right? So if you have distribution, what's going to come up next? Accumulation, right? Because it's AMD. Accumulation, manipulation, distribution, and that's also a cyclical thing, right? So after you distribute and you've expanded somewhere, you are likely to accumulate. Accumulate is also consolidation, right? So you're going to consolidate for a while, and that means price is going to be going back and forth, not really respecting proper price action and proper price structure, right? Unless you are very, very knowledgeable or you're going down to lower time frames to trade those particular conditions. But if you're new, you want to be avoiding all kinds of consolidation and accumulation. And that is typically when you have an expansion prior to. So let's say also, a time to not be trading is in the AM session, right? If we moved a lot overnight, wait until the PM. typically in the PM, you will have a pretty good session with pretty good price action with a pretty obvious draw on liquidity after the AM session was pretty lackluster, right? Let's say, for example, also your targets have been hit for the day. Let's say an old high, a major old high on the daily or 4 hour that you were targeting got hit prior to 9:30, right? Typically the first half, to the, maybe all the AM session, it'll be pretty choppy, right? So you don't want to be trading in those conditions. You could see really good textbook setups that just completely fail because we've already hit the target for the day. So price is not really drawing anywhere, right? It may be reacting from something, but it's not really drawing anywhere, which is why you need to establish and wait for a new established draw on liquidity. And that's going to be after time, after it has accumulated at that, new high or new low. And I study this, trust me. A lot of times when you go in the morning, let's say it's even 10 a.m. and it's hit its high, watch from 10 to 11, it'll typically just consolidate for a while. So you need to be pretty mindful of that. Also, let's say, for example, you have some very high impact news, right? Prior to CPI at 8:30, or let's say you have NFP at 8:30, right? Or let's say you have some FOMC at 2 p.m., or you have some other major red calendar news coming up. A lot of times prior to that, the market will, a lot of times the market may not move because it's waiting for that news to come out for there to actually be a manipulation that can take price higher or lower, right? And so a lot of times I like to wait until after news comes out because then I know that there's no more real manipulation that I'm going to be worried about when I'm taking my trading, right? Especially if you're in a trade, a lot of times, like if some news comes out, it can just spike you out. Right. And so you want to wait for the right conditions. Right. And there are a couple other things that we can go over there across my YouTube channel in terms of these suboptimal conditions. I talk about them all the time. But, let's get on to the move, I guess, just from a standpoint of continuing to progress forward here. So the next thing is over trading, right? So have a set plan going into the day, right? So my plan, just for you have an understanding, is, if I take one loss, right, on an account, right? For example, if I take one loss on and I have actually two rules for my live and evals. For my live account, I really want to be protective of it. So if I take one loss, I'm done for the day, right? What does that do? It encourages discipline. It encourages patience, right? If you only can trade once that day, then you will be waiting for the best setup. And that is what I'm also telling. That's going to be another thing that I talk about a little bit later, but you want to wait for the best setups, right? And so having that rule in your mind of taking only one trade a day will make you not just want to take everything you see, but things that are just very optimal for you to see, right? So if I'm on a live account, I'm a funded account, I'm only taking one trade a day. If I take one W, done. One loss, done. Wait for the next day, right? Or the next best session or the next day with a good session to trade in, right? If it's an eval, I'll permit myself two trades, right? So if I take a loss, I have one more chance to make a W, and then if I make that W, I'm done for the day. If I take one loss and then I take a second loss, absolutely done for the day. If I take one W, I'm done for the day, right? So those are the kind of things that you need to incorporate. You can even copy that verbatim. This will help you from tilting. Tilting is when you overtrade, because you're emotionally trying to get back the money, and you end up blowing your account, right? So that's another thing that we talked about. Now, treating evals like demos. A lot of time people will use an eval like for demo trading. I personally don't like to do that. That's because you're incentivizing yourself that, okay, I'm just going to gamify the system. And, if I just take some crazy trades or whatever, if I could take 5 trades on my eval today because it's not a real account. Like it's not a live account. It's not actually funded. Like, there's a high risk, there's a high reward if I'm able to just, scalp my way into it to passing the account. Now, personally, I do not like to do that because you're eroding the discipline and the patience that you're building into your mind, right? Trading is very psychological. You want to make sure that everything that you're doing in your life is emphasizing discipline and self-control so that it translates to that in the chart. Trust me, it's a muscle, right? So if you are exercising, a gambling mindset and spirit, when you get to a live account, it's not going to be any different, right? You're going to be looking at setups and be like, oh yeah, okay, I'm a little bit more controlled. This one looks pretty good. I'm going to take it. As opposed to when you looking at training your mind to only take very good setups. You only need 2 trades a week to get 10% per month, right? If you risk 1% on an account and you get a 1 to 3, then you can make 6% per week with just 2 good trades. How many trades are there even a day? Probably 2, right? So if you just wait for the really good ones, you can make a lot of money, right? And so taking less trades and focusing on, being serious about every trade, no matter whether it's an eval account or a live, will really help you in the long run. Buying too many accounts at once, right? So buying too many eval accounts at once. A lot of people like to stack their eval accounts, without passing them. So here's my rule, right? If I will only have one eval account at a time, right? So let's say, for example, I have one live and I have one eval, right? If I have an eval prop firm account, I will only trade with that. So okay, hold on, let's say it again. Basically, like I will only have one eval account at a time, which means that I will not be stacking multiple evals at once, right? So if I want to have like $300,000 in equity from a bunch of 50K accounts, right? Like a lot of people get very, ambitious and want to like pass all six 50K accounts at once. You're gonna like those numbers are gonna be very scary for you, especially if you're not very advanced, right? If you're a beginner or you're intermediate, like you want to be building discipline and want to just focus on one account at a time and building that account at a time. Let's say you passed one and you have a live and you want to link that up with the new eval you're about to buy so you can stack another account. That's fine, right? So let's say, for example, even I have 2 or 3 lives, right? But I have one other eval. Like that's okay. But focusing on having one eval at a time, you don't want to be passing too many evals at once, because you're basically, over leveraging the amount of money that you should be focused on producing at once, right? You want to build it. You want to build up your way, right? In terms of equity. So the more experience, the more accounts you've passed permits you to stack another account on top of it, right? And you're being more patient about it. And that way, when you lose, right? For example, let's say you have 300K eval accounts at once, instead of losing, $500, you've lost 3K in a day because you have 6 other accounts. Like that is not good for you psychologically, right? It makes you afraid to take trades. You need to focus on taking good trades, not very, very largely profitable trades, right? The next one, taking non-obvious setups. By the way, if you like what you're hearing so far, press that like button, right? Subscribe as well. Press the notification bell so you don't miss our daily series where we go over daily bias and what just happened in the charts for the day. And leave a comment below if you have any questions about anything I've said or you just disagree with anything I've said. Feel free to chime in. I'm not I'm not greedy when it comes to that. I'd love to hear feedback. Taking non-obvious setups, right? So a lot of times we trade the 22 model on this channel, right? And if you don't know what that is, I have several videos on it. I have a whole playlist. Go check that out. But the 22 model, right, a lot of times it can look non-obvious, right? And whatever your model is, you may be scratching or itching to get an entry because, okay, all your parameters have been hit, but it doesn't look good. It looks disgusting. It doesn't look obvious, right? A lot of those times is when you recognize that your setup, even though you followed your parameters, still fails. It's because it wasn't very obvious, right? Like you can minimize the losses you take by just waiting for those things that just, what trade entries look good. That's what I was talking about earlier about the wins you take. Why they're wins and it's so obvious to you. Those are the ones that you want to be waiting for. Just when everything is smooth and butter and like, yeah, that's just a great setup. Something that you could post on Twitter and be like, hey, this is the setup that I took. It's very obvious. Be patient. Good setups are very obvious. Okay. And last but not least here, trading when your emotions are high, right? If you are emotional at any point in time, if you ever feel like that yuck feeling in your chest or in your throat, right, where you can barely swallow, right, because maybe you took some losses or you're just anxious, you don't know where price is going to go, or you have maybe a couple $100 left in your eval and you don't want to blow it, right, or even your live. Like if you're feeling that way that day, just close the charts, go do a mindfulness meditation, and whenever your emotions are low, then you can come back. Right. But if you ever feel a heightened in your emotions, you are basically statistically disadvantaging yourself when it comes to trading, because trading is a very psychological thing. Right. It's very algorithmic how to enter, but when to enter, why to enter, and all those things are very, very psychological in nature. Right. And so you want to make sure that your psyche is at its most optimal state. These are some of the major mistakes that I made in 2024 and that I see a lot of my students make and see a lot of my peers make. And if you're able to curb these 6 things and work on them, I promise you will save yourself from taking so many losses and be able to keep and grow your equity a lot more efficiently going into 2025. So make sure you like this video, press the subscribe bell, press the subscribe button, press that notification bell, leave a comment below, and join the Discord as well. And I'll see you guys in the next video. Peace.